Hey everyone, John Henry here, slingshotfutures.com. Today we're going to be talking about one of my favorite types of, it's not necessarily a pattern or a setup per se, it's just a type of market structure that you may not be familiar with. You may have heard me talking about it from time and time again, but it might not be something that your eyes are trained to see yet. And that's called a three-push wedge. Now, a three-push wedge is, well, exactly what you would think it would be. It's a three-push wedge. It's a wedge that forms with three pushes, right? Could be three pushes ascending, could be three pushes descending, doesn't matter. The important part is that it came with three pushes, right? So we have 1, 2, and 3. Now that third push right there, that's where the things of the market, the kind of movement of the market starts getting very interesting, because that's a decision point. A three-push wedge is generally seen as a potential area of stalling. Might be a reversal, might just be a pause in a market move. Either way, though, generally speaking, when you have a third push in something, the market takes a little bit of a break. Now, what does this look like in reality? Well, in reality, it can be any number of things, depending on how you like looking at it. You could consider a candle push, being 1, 2, and 3. You can see those little pushes of the candles. That's one way to look at it. Not my personal preference. My personal preference is looking at larger structure, and larger structure in this case would be like this, right? You have a big move up, that's push 1, pulls back, push 2, pulls back, push 3. Now, could you subdivide this into more? Yeah, you could. It's very, you can break this down depending on your personality in a lot of different ways. Very similar to a lot of other market structure kind of moves. So you could also say, okay, well, you've got push 1, push 2, push 3. So it is variable, right? It depends on how you like looking at things. And it does require a little bit of practice, kind of get used to the way that it looks, used to the way that it moves, etc. And then from there, things get a little bit easier. But generally speaking, what you're looking for is the market to make a three-legged move in any direction. And generally, the reason why you're looking for it in the first place is for the market to take a little bit of a pause. Maybe you're long and you're looking for a location to take some profit in. Well, after it's made a third peak to a new high, chances are that's probably a good location to maybe look to take some profit off the table. That's the type of situation. Now, if you're a counter trend trader and the trend maybe isn't that strong, you could be looking for a potential quick little counter trend scalp or even a bigger counter trend move. Here we have a chart of CGC, and we can see it's a pretty obvious three-push leg to the upside, and it starts finding resistance and coiling back down. But there are going to be times where it's just simply not that clear. You're going to have other times where maybe it doesn't look that nice and neat, or maybe visually you looked at it a different way than I did, and you were looking at the smaller little ones inside of there. So let's take a look at something that might be a little bit more pronounced, if you will. And here we have, right from the beginning of the day, we have a very strong move down, right? It went sideways for a little while. This is on AAOI, Applied Optoelectronics. We had this huge leg to the downside, followed up with a second leg, and then followed up with a third leg. This is the type of situation where if I'm short, and let's say I sold in here, or let's take worst case. Say I sold the swing low breakdown, right? And I'm looking for a place to say, wow, maybe I want to lighten my load a little bit. Maybe I want to take a partial profit area, or maybe I've already taken a partial profit. I'm just simply looking to exit a little bit more to put a little bit more in the bank. What better way to look for a location than a third push down? Because very frequently when you get that third push down, the market tends to go a little bit sideways. And that's exactly what we had here. We had that big, strong third push down, and the market went sideways for a very long time before finally coming back down to a new low. And you'll notice that low side breakout was very weak. And that's because most of the move after a third push is done. There's not a whole lot left in the tank to keep the train going, and you'll usually see those consecutive breakdowns afterward not be as strong. That's generally what I'm looking for, right? I want to see a big push down, and this is a great way to look for potential profit taking. It's a great way to look for really any number of things. Maybe you're looking for a counter trend move. Don't necessarily know that I would want to buy AAOI when it looks that bearish, but you get the idea, right? That's the concept. That's the general idea when you're looking for a location to take some profit or lighten the load, or maybe to get into a trade, is looking for that three-push wedge. It happens all over the place. It happens on stocks, Forex, doesn't matter. If it's a market, you're going to see it. Here's a chart of crude oil. Actually, let's do a 5-minute chart. That's a little bit cleaner. Get a 5-minute chart of crude oil up on the screen here. And what do we have? Well, we have a massive rip to the upside, and you could subdivide this into three pushes, right? 1, you've got 2, and 3. You could even subdivide further and say 1, 2, 3, and the third push is right there. That's totally fine as well. The big thing that we're looking for is if I'm in long and I bought down here, this is a viable location to potentially start looking to exit some. And it did keep going. Welcome to real life. It doesn't always work as perfectly as expected, right? But generally, what do we see here as we start getting more information? Well, this big leg up, these pullbacks were barely anything. So we have one big old leg to the upside, a second big leg, and a third big leg. Chances are, once we started breaking above this high, anything above this high, which is that third push, is a zone of profit taking. That zone could be 1 cent, it could be 30 cents. You never know how far it's going to go. But what we do know is that when it starts pushing into that third push to the upside, this is where a lot of traders are going to start looking to liquidate some or all of their position to lock out some of the profit. You can see, look at the reversal that happened after the fact. And now we can look to the downside and say, you know what, this is one big leg down, two big legs down, could be looking for a third leg lower. And if we start breaking through a new low, we might find a reason that sellers might start exiting. So something very, very interesting to keep in mind in terms of market structure, and something that you'll hear me talk about time and time again, but I haven't really done a full video on it, and wanted to make sure that we covered all the bases so you guys knew what I was talking about. So a 3-push wedge, very important in terms of market structure, and something that I highly encourage you to take a look at, and just maybe, see if you find it interesting. So that's going to do it for this one. I hope you did find it interesting. Maybe it's something you can add to your tool belt, to your trading repertoire. As always, if you have any questions about it, feel free to send me an email, jbrink@slingshotfutures.com. Don't forget, give me a like, put that thumbs up button underneath the video. Also, make sure to subscribe and click the little notification bell icon to the right of that so you're notified every time these videos pop up. We launch a lot of videos throughout the week, and you don't really want to miss them. I think they're pretty good. Might be a little biased though. Aside from that though, as always, and hope you had a fantastic holiday weekend. I hope you had a great trading day today, and we'll see you all tomorrow.